Yeah, now we will discuss valuation of material received or receipts. Guys, we discussed the procurement procedure. Now we will see, sir, once the material is purchased, at what value should we record it in our books? At what value we have to record it in our books? Guys, in your accounts and all, you would have done nothing new. You would have passed purchase entry. Correct? Yes. You will be like, sir, what is that entry, sir? Purchase entry now. I am hearing it for the first time. Purchases account debit. Purchases account debit to. If it is a credit purchase, then creditors. If it is a cash immediate payment, then it would be cash or bank. So creditors or bank, I will write. Creditors or bank. Correct. So there is a value at which you will record this transaction. Yes, sir. Yes, sir. What is that value? What is that value? We have to decide. In costing, they will not directly give this value and ask you to pass entry. No, no, no. Our job is not to pass this entry here. Our job is to calculate this X value. I am talking about value, not any past. Chalo. Now, guys, in your accounts, you would have learned something called as accounting standard 2 or Ind AS 2, valuation of inventory. Now we are going and connecting for that only, but in costing paper. Clear? Now in simple, guys, what all cost you would have incurred to bring the inventory to the present condition and location? What do? You will include it in the value of the inventory? Yes. And if you have got any discount and all, will you reduce it? Yes. That is what is discussed here. But each and every item they are told, should you add it, should you deduct it, or you should not do anything. Clear? Yes. What are those? We will understand. So this area you can also expect a numerical question. For 4 or 5 marks, you can expect a question. They will give all the data. They will ask you to calculate the value of inventory, guys. Means it is nothing but the purchase value of goods or inventory. Okay, sir. Let us start with this. After the procurement of materials from the supplier, actual material cost is calculated. Ascertainment of cost of material purchased is called valuation of materials of material receipts. Cost of material includes cost of purchase net of trade discount, rebates, duty drawback, input credit availed, etc. And other costs incurred in bringing the inventories to their present location and condition. What all cost is incurred till the goods are received and stored in my godown? We have to include it. Sir, once I receive and store it in my godown, I might incur some other cost like carrying cost and all to look after the inventory. Will we include it in the cost of inventory? No, no, that we will record it separately. That is also my expenses only, but I will record it separately. Clear? Yes. So you guys, even for fixed asset also similar concepts is there. Sir, till the asset is put to use or ready to use, what all cost you will incur? What do? Capitalize it, including installation costs or installation expenses, loading, unloading, transportation, freight inward, all this you will capitalize? Yes. Very similar to that. It's very similar to that. Actually, sir, if you're already done with your accounts, this and all becomes very easy. Very easy. Yes, it is actually accounting concept, but we are dealing it in costing. Invoice of material purchased from the market sometime contained items such as trade discount, quantity discount, freight, duty, insurance, cost of containers, taxes, cash discount. Now, how do we treat it? While valuing the inventory, how do we treat it? That is what we are learning now. One by one, every item I have given. Let us see, guys. Treatment of items associated with purchase of materials is tabulated as below. First one, discounts and subsidy. Discounts and subsidy. Trade and quantity discount. Trade and quantity discount. Do we reduce it? Yes, we will deduct it. Trade or quantity discount is shown as deduction from the invoice. It is deducted from the purchase price if it is not shown as deduction in the invoice. If it is already reduced, we need not do anything. But normally they will give it separately in the question. Okay, so assume they would have given listed price 1 lakh and they have given trade discount 10%. So what should we do? 10% of 1 lakh reduce. If they have given price after discount, should we again reduce discount? No, no. If it is already reduced, we will leave it there. If not, we will reduce it. Guys, If nothing is mentioned, they have given listed price, they have given discount separately. What should we do? Reduce it. Assume listed price is not yet reduced. Discount is not reduced from the listed price. Okay, so next there is something called as cash discount. Cash discount is not deducted from the purchase price because this we will not record it at the time of purchase. This we will record it at the time of payment. At the time of payment, guys. It is treated as interest and finance charges. So it is to be ignored. Guys, simple. If I have to connect again to the accounts. Now, in your accounts, you would have done like this. Listen. Sir, I purchased the goods worth. Assume 1 lakh. At the time of supply itself, supplier gave me 10% trade discount. Supplier gave me a trade discount of 10%. Now, will it be recorded in the invoice? Yes. Now, what is the listed price? 1 lakh minus trade discount. How much, sir? 10% means 10,000. I am taking it at 10%. So, how much is the balance amount, sir? 90,000. Guys, now I will record purchase entry. I have purchased the goods 90. What is my commitment now towards the supplier? 90,000. What is the entry I will pass? Purchases account debit to creditors or cash or bank. Clear? Assume it is creditors. I am not paid immediately. Okay, sir. 90,000. 90,000. 90,000. Any doubt in this? No. So I will value the inventory. I am purchasing the goods and recording in my books at what price? 90,000. Now supplier told, because if you pay it within 10 days, I will give you 5% more discount. He is offering cash discount. Cash discount andre, sir, if I pay cash, currency note, black money, he will give me 5% discount. Angalla. If you pay within certain days, he is offering you some extra discount. Clear? Now supplier called me and told, because if you pay within 10 days, I will give you 5% more extra discount, cash discount. Cash discount. Now will I go and scratch my purchases and record at 5% less? No. I have already recorded. At the date of purchase itself, I already recorded. So now what do I do? On the date of payment. On the date of payment. On the date of payment. What is the entry I will pass? What is the entry I will pass? Assume I have credited here creditors. Till I pay is the liability for me? Yes. So what is the entry I will pass? Creditors account debit. Is he going out now? Yes. Tata bye-bye to creditors. Tata bye-bye to creditors. Going out. Till I pay. Who was he for me? Liability. ಯೋಚನೆ ಮಾಡ್ತಾ ಇದ್ದಾರೆ ಯಾರು ಹೌ ಇಸ್ ರಿಲೇಟೆಡ್ ಅಂತ creditors because it was a credit purchases. 2. Immediately how much I am paying now? 5% less. 5% less. So 85,500. 85,500. 2. Discount received. 2. Discount received. How much? 4,500. Now, did I record this separately? Yes, sir. I recorded this separately. So, did I do any adjustment with my purchase cost? No. So, while calculating the value of inventory when I have purchased, should I reduce cash discount, guys? No, because I will record it separately. Now, what have I done with this discount received? I have credited. How will I close this? By transferring it to P&L account. On the P&L account, discount received will appear on the credit side or debit side? Gain. It is a gain. Credit side. Gain. Credit side. Okay. I have got the discount. I am not giving the discount. What I am giving is called discount allowed, which I will debit. This is received. It is a gain. Okay. Now I will send it to P&L account. Yes. What is the entry? Discount received to P&L. Discount received to P&L. Correct? Yes. So now what am I trying to tell is, guys, did I give any effect for this discount at the time of purchase? No. When did I give it? At the time of payment. At the time of payment. Is that clear? Yes, sir. So in simple, if it is the trading or quantity discount, what should we do? Deduct it. If it is cash discount, what should we do? We should not do anything. You should not do anything. Leave it. Not deducted means you should not do anything. Sir, should I add, sir? Not deducted, alva. Adike should I? No, no. Sure. Guys, now if I have to connect it to GST. Why? Because you would have learned all, especially those who are writing both the groups, or else who have already finished one group, would have studied taxation. Yes. Now, in GST, discount is covered in section 15 subsection 3. 15. Just a minute. In between some disturbances are. Yeah. 15 subsection 3, which talks about discount. There are two types of discount. 15.3a. 15.3a. Discount which is given at the time of supply, which is recorded in the invoice. Can we reduce it? Yes, we can reduce it. As per GST, I am talking about it. Next, 15.3b. Discount which is agreed or known at the time of supply, but given after the supply. Maybe some minimum purchase quantity and all they would have told. Yes, sir. Can it be reduced? Yes, provided supplier issue credit note to the recipient, and if recipient has already claimed full credit, he has to reverse the credit to the extent of GST on discount amount. On the discount amount. Correct? Yes. And for those who have not yet attended taxation class or not studied taxation class, don't worry. Okay. Sir, will they ask that question in the casting? No, I'm just connecting the subjects. So, for casting. Okay, 15.3 and all, don't worry. 15 subsection 3 is for only GST. Now, if it is a trade or quantity discount, what should you do? Reduce it. If it is a cash discount, don't do anything. Don't do anything, it will be taken care in accounts. They will pass a journal entry for it. Will we include it or reduce it while calculating the value of inventory? No. Next, coming to subsidy or grant or incentives. Subsidy, grant or incentives received from anyone. Received from anyone. Deducted. Any subsidy, grant, incentives received from the government or from other sources are deducted from the cost of purchase. Received from anyone has to be reduced. Received from anyone has to be reduced. Sir, why are you highlighting so much, sir? What is special in that? Those who come out of GST or taxation class, only 15 to E. 15 subsection 2 class E. Subsidy will tell only if it is received from others other than central government or state government. Add it. Deduct. Add it. Provided it is linked to the price. Correct. Sir, if it is received from central government, state government, what should I do, sir? Tell thank you, leave it. But give note. Or else evaluator will thank you for giving him the opportunity to cut the marks. Understood? Again, GST. This is a part of GST. Okay. 15 subsection 2 clause E, which talks about inclusions. If you have received any subsidy from central government or state government which is linked to the price. Linked to the price means because of this subsidy I have reduced the selling price. You don't do anything. If it is received from anyone else, then you will add. But in costing, different guys. So in costing, subsidy, grant received from anyone, deduct. Let the giver be anyone, government or non-government or NGO now, whoever it is, deducted. Why I am connecting and mentioning this, guys? Because after studying both the papers, now you will be confused between subjects. I learned something else. No, this sir has taught something wrong here. Anta. Clear? Huh? Yes. So obviously in the respective subject, in the respective provision, the treatment is different. There we are calculating value of supply to pay GST. Here we are calculating value of inventory to record it in our books to pass purchase entry. Okay. Sure. Now come our area again. Duties and taxes. Road tax, toll tax. Road tax, toll tax if paid by the buyer, then it should be included, added with the cost of purchase. Guys, if any tax, road tax, toll tax and all, if the buyer is paying it, add it to the value of inventory. Even 15 to mentioned about this. If supplier charge anything separately for the recipient, for anything done by the supplier, okay, assume he has arranged for transportation, everything. He is charging it separately to the recipient. What should we do while calculating value of supply? Add it. Same way here. What should we do, sir? Add it. Because for the buyer, is it a cost? Yes. Is it a cost for the buyer? Yes. Add it. Next, GST. GST. Guys, listen. Because I need make you guys understand something with respect to input tax, output tax, and all. See, if you already learned GST, you will be master of it. But still, it's my duty as a costing teacher to mention. Oh, now assume, guys, I am a registered supplier. Who am I? Registered supplier. Registered supplier. Sir, I have taken a inward supply, sir. I have taken a inward supply. In GST, purchases is called as inward supply. Okay, now yes. On that, I have paid a input tax of, assume inward supply is for 10 lakh, guys, and I have paid a input tax of 1 lakh. Totally, my purchase value, including GST, is 11 lakhs. Any doubt? No, sir. Now, sir, I am using that to provide taxable outward supply. Taxable outward supply, sir. Taxable outward supply. So assume my sale value is 30 lakh on that GST. We call it as output tax. Output tax, what I am supposed to pay on my sales. Sales is nothing but outward supply. On this, assume my outward tax is 3 lakh. So how much I am charging to my customer? 33 lakh. We call it as a recipient. Recipient from GST point of view. Okay, sir. So from my customer, I have collected 33 lakh. 30 lakh is for my pocket. 3 lakh, I have to deposit it to the government. But in GST, they have given a benefit, something called as input tax credit. Whatever tax you have paid on your inward supply, if you satisfy certain conditions given in section 1617 of CGST Act of, that is again part of GST. Yes. Can I claim the credit? Yes, sir. I can claim the credit. Now, assume, guys, I am eligible to claim credit. So how much is my output tax? 3 lakh. Will I deposit entire 3 lakh to the government? No. I will reduce input tax credit of this 1 lakh and deposit to the government how much? 2 lakh. 2 lakh. Now on the ultimate selling price, what is the tax? 10%. I have taken 10% GST. What is the ultimate tax amount? 3 lakh. Did government get 3 lakh? Yes. When I purchased, they charged me 1 lakh. Now I am depositing with them 2 lakh. Did they get it? Yes. GST is paid on the value additions at each stage. At each stage. Now coming to cost. Now coming back to costing. Now, sir, whatever 1 lakh you had paid a GST at the time of purchase, no, should you include it in the value of inventory or not? Depends on, can I claim the credit of it or not? Did I claim the credit of it? Yes. That means I am getting the benefit of this in GST. Yes. That means you should include the value of inventory only at 10. Only at 10 lakh. What is the value of your inventory? 10 lakh. Should we add GST? No. When credit is available, will we add it? No, we will not add. We will not add. Got it? Yes. Now assume, guys, for some reason credit is not available. Credit is blocked, or else I am not satisfied certain conditions given under section 16, sir. So I cannot claim credit. Yes. So how much should I pay to the government now? Full 3 lakh. Now, what will be my value of inventory in costing? 11 lakh. It is including this one. It is including this 1 lakh, guys. So simple, simple. Listen here. So listen here. GST paid on purchases. GST paid on purchases. Credit available, check it. Credit available is nothing but ITC. ITC. Under the 2 arrow mark. Yes, so no. Yes, so no. And sir, to know that credit is available or not, should we know the GST provisions and all for costing? No, no. They will only give the hint in the question. They will only tell Is credit available or credit is blocked and all. If nothing is given, assume credit is available. If nothing is given in the question, they are just given GST paid on purchase is so much. Assume credit is available. If they only given credit is blocked in GST, credit is not available, then what do you do? Add. Okay. If it is yes, credit is available, then don't add. Don't add. Don't add, guys. Don't add. If no credit, then what do we do? Add to cost. Add to cost, guys. Did you guys get it? Yes. GST paid on purchase of raw material. Okay, let me write that also. Purchase of raw material. If credit is available, no need to add. No need to add. If credit is not available, will you add it to the cost of purchase? Yes, you will add it, guys. Got it now? Any doubts, sir? Yes. See, that is how the connections of subjects you have to study like this. Okay, that is the beauty of CA course. Sir, one subject is related to others. Yes, auditing, especially when you go audit of what? Books of accounts. So if you know accounts, audit is almost like, sir, okay, because whatever accounts you have maintained, that is only your auditing. Now, if you know how to maintain accounts, then to check the audit, it becomes easy. No, sir, accounts, I don't know anything, sir. Then what will you audit? Correct, because what is correct or wrong? How will you know, sir? Correct, assume. There in audit, there is something called as tax audit also. Section 44 AB of Income Tax Act. Okay, who will do it? Accountant. Which accountant? Chartered accountant. Clear, huh? So chartered accountant has to be appointed whenever audit is applicable as per section 44 AB of Income Tax Act. Chartered accountant has to be appointed. He will conduct the audit and give the report 1 month prior to the due date of filing the returns. What is that 1 month? 31st October is the due date to file the return. 1 month before that means 30th September. Correct? Yes, sir. On or before 30th September. Now, if you don't know income tax, what audit you will do? Correct? Yes. So, if you are a tax auditor, what do you check? Is income tax provisions followed properly? Is, sorry, you claim to, in disallowed expenditure, debit ಮಾಡ್ಬಿಟ್ಟಿದ್ದಾನೆ. Okay, what do you do? Disallow. Correct? That is what you will do. Now, you yourself don't know what is disallowed, what is allowed. What will you audit? Oh, everything is correct. Perfect accounts. Audit. Correct. So that is why. See, when it comes to audit or any subject, guys, it is interconnected. It is interconnected. One or the other place, it will be linked. Okay, check it. Let me read. GST, that is goods and service tax. Goods and service tax is paid on supply of goods and services and collected from the buyers or recipients. It is excluded from the cost of purchase if credit for the same is available. If credit is available, don't add. If it is already added, remove it. You have to remove it. Normally in the question, they will give it separately. Should you add it? No. Unless mentioned specifically, it should not form part of cost of purchase because we assume that ITC is available, guys. We assume that ITC is available. If question is silent, if they themselves is given, no credit is not available, then what do you do? Add it. And one more thing, guys. See, they may give GST in percentages and all. So in that case, assume, sir, GST is given as 18%. Now in this case, I have to apply GST on 1 lakh on 90,000. 90,000. 90,000. And if they only given the breakup CGST, SGST separately, please take 9% CGST, 9% SGST. Please give a breakup. You don't take aggregate. Please give a breakup. Hope you guys are getting what I'm trying to tell. There also, guys, see, in costing, they don't expect you to have a knowledge of GST, but somewhere important because, sir, what if there is cash discount also? Will I reduce that also and then apply GST rate? No, no, no. Because this is something which is given after the supply. As per 15 subsection 3 also, this is not allowed. This is not allowed. So please be careful. If GST is given in percentage, reduce only trade discount or quantity discount. Because this is something which is given at the time of supply. Clear? If something is given after supply and all, please don't reduce that while calculating GST also. Clear. And in GST fund, but story and all is there. Was it agreed at the time of supply? Sir, the credit is reversed. Credit note is given and all. That is not important from costing point of view. That is not important from costing point of view. Just I repeat once again. If GST is given in percentage from list price, just to reduce trade discount, whatever amount you get on that you apply GST percentage. Clear? That too, if it has to be added. If it has to be ignored, why are you worried? On what should you apply? Clear? Yes. Next, one more connection if you want. One more connection if you want. You want? Listen here. Whatever we discussed about was value of inventory. Value of inventory. Now again coming to GST. Let us connect GST and income tax. Let us connect GST and income tax. Guys, section 16 subsection 3 of CGST Act tells if you have claimed or else if you have added GST to the block of the asset to calculate actual cost. Actual cost for which purpose? Income tax purpose. Actual cost computation in income tax is given in which section? Section 43 subsection 1. There assume guys, I have purchased the asset for 10 lakh, paid GST of 1.8 lakh, 18%. Now you would have calculated the actual cost. Yes, you have two options under income tax. You can take either entire 11.8 lakh, add it to the block, start claiming depreciation. Add it to the block, claim depreciation. In that case, what you have done? You have capitalized GST. Under income tax, under GST, 16 subsection 3 is telling no credit in that case. No credit in that case because you have added the GST paid at the time of purchase of capital goods, which is nothing but fixed assets, and you have started claiming depreciation on it. So you are getting benefit in income tax under section 32. You will claim depreciation now. Yes. So we will not give benefit under GST. Sir, what if I have capitalized only 10 lakh, sir? What if I have capitalized only 10 lakh in income tax? That means my actual cost for income tax purpose is only 10 lakh. And I have added to the block how much? 10 lakh. I started claiming depreciation on how much? 10 lakh. Now, on 1.8 lakh, can I claim ITC, sir? Yes. Provided you satisfy all the conditions and you are not restricted, or if the credit is not blocked. Hope you guys got it. This is with respect to capital goods or fixed assets. But what we are dealing with is what? Inventory. But they have similar provisions? Yes, for both. We will not give double benefit for you for GST. Either claim there or claim here, not both the places. Next, customs duty. What is customs duty, guys? It is paid when we import the goods into India. If I am importing the raw material from outside India, then should I pay import duty? Yes. Now, should I add it to my cost? Yes. Basic customs duty is paid on import of goods from outside India. It is to be added with purchase cost. But here also sometimes government may give duty drawback and all. Duty drawback. Duty drawback is nothing but refund. Okay, whatever import duty I have paid, they are giving it. If I am eligible to claim duty drawback or refund, then we will not add. Okay, similar to ITC. For GST, I have something called as ITC, na? Whereas for customs duty, I have something called as duty drawback or refund. So if I am eligible to duty drawback or refund, will I add it to the cost of materials? No. If nothing is given in the question, what should I consider, sir? Just add it. Just add it. Understood? Tax components. Next, penalty and charges. Penalty and charges, guys. Demurrage. What is demurrage? Demurrage is a penalty imposed by transporter for delay in uploading or offloading of materials. Now you have approached a transportation company for transportation of your goods from Karnataka to assume Coimbatore. Karnataka to Coimbatore. Now the vehicle has come to your place. You are making them wait. You are not unloading your goods. You are not, sorry, not, you are not loading your goods. Or after reaching Coimbatore, there is no one to unload the goods. Yeah, so you're wasting their time. Can they charge demurrage for it? Yes. If there is a provision for it as per the agreement, they can charge. You're wasting their time. It is an abnormal cost and not included with the cost of purchase. So should we add it to the cost of materials? No. Then next, detention charges or fine. Detention charges or fine imposed for non-compliance of rule or law by any for non-statutory authority. Will we add it, guys? No. It is again an abnormal cost, not to be included with the cost of purchase. Not to be added with the cost of purchase, guys. Next, penalty. Penalty of any type is not included with cost of purchase. Of any type will not be included with the cost of purchase. In this, detention charges, fine and all is what we pay to the government authority or police department. For a, for example, assume, sir, my vehicle was carrying heavy goods, heavy loaded goods beyond the limits. So police authority stopped and put a fine. So obviously it is a cost per week, yes, but can I include it in the cost of inventory? No. All these are abnormal in nature, guys. They all are abnormal in nature. What do we do it? Separately debit it to costing P&L account. Separately debit it to costing P&L account. You can put a flower bracket and write debit to costing P&L account. Debit to costing P&L account. Next, other expenditures. Other expenditures. Insurance charges. Insurance charges are paid for protecting the goods during transit. It is added with the cost of purchase. Guys, if insurance policy is taken during transit, that is from supplier's place to my place, whatever insurance premium I have paid, I have to add. Now I would have taken insurance policy even after I received the goods. When I have stored it in my godown, I would have taken insurance policy. Yes. That premium should I add it here? No. Because only till you receive the goods, whatever cost is incurred, we have to include it in the value of inventory. After receiving the goods, I have stored the goods in the warehouse or godown, during which I have taken the insurance policy. I have paid a premium for it. You will record it separately. You will record it separately. You will add it to the value of inventory. Next, commission or brokerage paid. Commission or brokerage paid is added with cost of purchase. That is paid to agent or the broker, whatever you have paid at the time of purchase, you add it. Next, freight inwards we will add. That is, what is the transportation cost which I would have incurred to bring the goods to my place? I will add. It is added with the cost of purchase as it is directly attributable to procurement of material. Sir, next I have also incurred freight outward or transportation cost to deliver my output to the customer. Should I add it here? No, no, no. Only freight inward. That is the cost which is incurred to bring the goods to my place. That is raw material. That is raw material, guys. Next, cost of containers or boxes. Cost of containers or box. Treatment of cost of containers are as follows. It depends what type of it. Is supplier charging separately that to the buyer? If it is non-returnable containers, the cost of container is added with the cost of purchase of material. Now supplier is sending the goods along with some container or boxes. For that box, he is charging me 5,000 extra. Should we add it in the value of inventory? Yes. Guys, even while calculating value of supply and all, incidental 515 subsection 2 clause D. Anything incidental done by supplier, if he is charging it separately to the recipient, including commission, 15 to C, commission. Remember, like, yes, sir. Should we add it, sir? Yes. Now, sir, supplier is doing some special packing or doing some protective packing and sending the goods to the recipient or buyer. For that, he is charging 5,000 extra. Should we add it? Yes. We should add it. Next, sir, what if it is a returnable container? Returnable container means, assume you are sending goods to me. You will send it in a container. After I receive the goods, I will send back the container to you. Should we add anything? No. Assuming you are not charging anything for me. Assuming you are not charging anything to me. There can be another scenario also. When you are sending the goods to me in containers, you will ask me to deposit some amount. Assume you have asked me to deposit 10,000. And when I gave back the containers to you, you gave only 4,000 back to me. How much deposit you took from me? 10,000. When I returned back the containers, you are giving how much to me? 4,000. So, what is the cost of me? 6,000. Should we add it? Yes. I have to add it. If you are not charging anything, we will not add anything. But here indirectly you charge me 6,000. Now you took 10, returned 4. Remaining 6. Govinda. So is it like expenses for me? Yes. Should I add it? Yes. Okay. Returnable containers, guys. If on the return of containers, cost of containers is returned back, then in this case, cost of containers is not added with the cost of purchase. If the amount of refund on returning the container is less than the amount paid, then only shortfall is added with the cost of purchase. Only shortfall has to be added. In my example, it was 6,000. I gave 10, you returned back 4. So how much should be added to the cost? 6,000. Next, if there is any shortage or loss, first identify, is it due to normal reasons or is it due to abnormal reasons? If it is due to normal reasons, don't give any separate treatment. Don't give any separate treatment. For example, listen. Let me explain with an example. Sir, I have purchased 1,000 kgs of raw material at 10 rupees each, sir. What is my cost? 10 lakh. Sorry, 10,000. Now, no matter what, sir, 10% will be normal loss. Whatever I do, I cannot control it, sir. So, what is the normal loss? What is the normal loss? 1,000 kgs into 10%, which comes to 100 kgs. 100 kgs. Yes, sir. 100 kgs. Now, what do we do with this? Will we give a separate treatment? No, sir. What about the cost which I would have incurred for this? It will be absorbed by remaining units. What is the remaining units? 900. So, whatever is the cost for this 100 kgs will be borne by whom now? Remaining 900. Now, if I ask you, what is the cost per unit after normal loss? It would be how much, guys? 10,000 divided by 900. That is after reducing normal loss. So, what is the cost per unit? 11.11. 11.11. Any doubt in this? Understood now? So, in simple, the cost of normal loss units will be absorbed by whom? Good units. That is remaining units. Remaining units. Now, assume, guys, out of this 900 also, another 50 is lost. Another 50 is lost. So, that I am treating it as abnormal loss. Why, sir? Because if I had taken some necessary measures, I would have avoided it. I would have avoided it. But just because of my negligence or carelessness, we lost another 50 units. Will be valued separately? Yes. So 50 units into 11.11. I will separately debit it to costing P&L account. Value, please. 555. Okay, 555 or 556. So what do we do with this? Debited to costing P&L account. Debited to costing P&L account, guys. Debited to costing P&L account. Hope you understood the treatment of both normal loss and abnormal loss. Guys, come on. Normal loss is what? Which is unavoidable. No matter what, it will happen. No matter what, it will not happen. So, will we treat that loss separately? No. What do we do? The cost of normal loss units will be absorbed by good units. So, automatically the cost of good unit will go up. Now, in my case, I purchased 1,000 kgs at 10 rupees each. Total cost was 10,000. But out of that, normal loss is 10%, which is 100 kgs. So the cost of this 100 kgs will be borne by whom? Remaining 900. Remaining 900. So for that 900 kgs, what would be the cost per kg, sir? 11.11. Now, did it increase? Yes, from 10 to 11.11. Why, sir? Because of this normal loss. Now, if there is any loss over and above normal loss, what do I treat it as? Abnormal loss. And I would have avoided it, but still happened. Maybe because of my negligence or carelessness? Yes. So, will we also include this also in the value of good units? No, no, no. As it is due to my negligence, what should we do? I have to pay it. I have to pay it. That means what should I do? Debit it to costing, profit and loss account separately. Separately. Now, sir, what is happening with this? What happens? I am trying to shift it to customers. Correct. Because when cost goes up, I will try to shift it to whom? Customers only. So cost of normal loss units actually is absorbed by good units. Good units is normally purchased by people. So our customers, I will try to shift it to them. Whereas abnormal loss is due to my mistake. I have to bear it. I have to bear it. And there are a lot more things to discuss about normal loss, abnormal loss and all. There is no end here. Clear? Even in this chapter, again we will discuss, and we have a separate chapter called process costing. There we will see how to value normal loss, abnormal loss. Okay, everything we will discuss step by step. As and when how much ever is required, we will be doing it. Yeah, let us see. Shortage in materials is treated as follows. Shortage due to normal reasons. Good units observe the cost of shortage due to normal reasons. Good units in my example was how much? 900. We expect that it would be good units. Over and above that, another 50 is lost. Clear? As per my example, good units expected is how much? 900. Losses due to breaking of bulk, evaporation due to unavoidable conditions, etc. are the reasons of normal loss. For example, evaporation, if I have to give example, guys, assume petrol. Sir, petrol, by the time it is brought and pumped into the petrol bunk, will it be same quantity, sir? No, there will be some liters which will be lost in evaporation. Is it a normal loss? Yes. Sir, if I can do something, can I avoid it? No. Few liters will be lost due to evaporation, at least at the time of loading and unloading. We cannot avoid it. We cannot avoid it. So even when you are handling too much of bulk quantity, sir, 1 or 2 units might be lost here and there, sir. Or few units will be lost here and there, sir. Especially which is maybe at the top or at the bottom might be lost. Clear? Yes. Next, shortage due to abnormal reasons. Shortage arises due to abnormal reasons such as material mishandling, pilferage means stealing, someone absconding. Okay. So, embezzlement also we call it as due to avoidable reasons. Due to avoidable reasons are not observed by good units. Are not observed by good units. Losses due to abnormal reasons are debited to costing, profit and loss account. Are debited to costing, profit and loss account. Oh, this is all about the valuation of material. Purchase procedure is different. Sir, purchase madaitu. Now, how much to record it in our books? I am done with purchasing. At what value should I record? I told you purchase entry we have to pass, na? At what value, sir? That is what we are discussing. You can get a separate question on this, guys. Clear? Yes, we'll do the questions now. Come to the question back.